Okay, good afternoon, and welcome to OptionsPlay. Today, we're here to talk about finding your directional edge. The reason we're here to talk about this is because to trade options successfully, it requires a clear directional view on the underlying stock first before you can start trading options on it. So today, what I want to do is explore how we can go about using the tools here at OptionsPlay to help you achieve that. Now, if you can hear me, please type yes into the chat window just so I can do a quick sound check. Okay, great. Looks like everyone can hear me. So let's start off by putting an image in your mind. Now, imagine a world where you have the knowledge and tools to instantly gauge every stock's trend and direction. This helps you cut through all the noise on the hundreds of ideas that are floated to you from every direction. Now, imagine that same set of tools also provides you with an additional, a directional edge so that you can find the highest probability setups for bullish and bearish ideas. This is the reality that I want to teach you guys today during this webinar. We'll review the indicators and tools available to you to achieve just that. And what I want to do is wrap this up by showing you how to leverage these directional views that you're going to be able to gain from using our tools into option strategies with limited risk and potentially higher returns. So for those of you that are new to OptionsPlay, welcome. My name is Tony Zhang. I am the Chief Strategist here. This webinar is going to be recorded, so not only will we send the recording to everyone afterwards, we will also send you the slides. So if you are following us along and you feel like we're moving too fast, or if there's something you want to review, don't worry. You'll be able to you'll have a chance to do that with the videos that we'll be sending after, but along with the slides. So I highly recommend, if you're starting out with this type of options trading or starting out with using directional indicators, take the time to review the webinars. And there's a whole slew of webinars that we've done previously to also help supplement some of this information. There will be links in the slides to all of those at the very end. So today's webinar is going to be both for beginners and advanced options traders. So whether you're brand new, if you are, I hope this inspires you to start taking a look at options trading. For those of you that are already trading options, I hope that you guys will be able to help figure out how to quickly find a directional view, and more importantly, how to leverage that into an option strategy as quickly as possible through what we're going to show you guys here today. Now, before I go ahead and get started, I'll just talk a little bit about what we'll cover here today. Number one, I want to talk about this concept called paralysis by analysis. I think a lot of us suffer from this today, not only from our trading, but from a lot of other areas, because we have so much information available to us. Sometimes it's really difficult to find, to cut through that noise and figure out what is actually important to us. So that's really what I want to address here today. Then we'll talk about trend and relative strength, why these are two important things to look at. Then we'll talk about how to use trend and relative strength to actually find our directional edge. And then what we'll do is we'll go through some bullish and bearish examples of what to look for bullish and bearish setups. And then lastly, like I said, what I want to spend most of the time here today is showing you some real live analysis with OptionsPlay, so that after we finish this webinar, you feel confident in not only understanding the topics that we're talking about here today, but more importantly, feeling confident that you have the tools right now after we finish to start implementing what we teach here today. So before I kind of launch into the meat of the webinar, I do want to launch a quick poll here. If you could just take a look here, I want to get a feel for what people are seeing in their day-to-day trading. Do you find researching a stock's trend or direction too complex and overwhelming sometimes? I want to get a better understanding as to what you guys are doing to research your stocks, how confident you feel in the indicators or data that you're looking at to help you reliably gain a directional view. And that will help set up kind of the points here that I'll be addressing here today. So far, about half of you have voted, and it looks like about half of you say yes, you find the amount of data to look at kind of overwhelming. About a quarter of you say no, you've figured out what works for you, and the other quarter basically says I'm not quite sure yet, which is okay. This is great. This gives us, something to look at. So it looks like about half of you do find the concept of researching a stock a little too complex or overwhelming, and that is normal. So that's okay, and that's what we're here to show you today, is how to make that a little easier. And for those of you that have figured out what works for you, great. Hopefully you'll learn something new here in terms of what else we can do to help perhaps solidify what you currently do, or maybe change your views on how to gain your views on the direction. So here's kind of what the poll results look like. So what I will do is I will spend about 15 minutes going through the slides, showing you what we offer here at Options, what to look for when it comes to trying to find a directional view. And then, like I said, we will spend some time using the actual tool for those of you that are brand new. So first, I just want to start off on talking about we currently are living in this information age, and we're currently getting data overload, meaning there's so much information that we're getting from the internet, from our brokerage firms, from our friends and family that provide us with different ideas and tips and data points to look at. And sometimes this can be overwhelming. The more data you have to look at, the less important each one is, and it becomes really difficult to cut through that noise and figure out what's actually important, what should you pay attention to, and what's actually reliable. So that's really why we want to take this approach of helping you simplify your life. Based on all the different things that are out there, one of the things that I have spent my career looking at and studying is technical analysis. And the reason I want to study technical analysis is because as a technical analyst, I believe that all information is already accounted for in the current price of the stock, meaning I don't have to necessarily look at all the individual information. I can distill that all down into the price of the stock. So that's why I prefer using technical analysis myself. So what I want to propose here in terms of helping you gain a directional view is to simplify, and I don't want you to confuse that with simple. Simplify simply means taking all the data and boiling it down to just a few data points that are useful, and it really helps you cut through that noise. And the 2 points that I want to look at today is trend analysis and relative strength. So trend analysis is pretty simple. It's any form of charting or using the historical charts to try to predict the future direction of the stock based on past data. This can be all different forms of, there can be plenty of different ways of doing trend analysis. You can simply look at a historical chart and look at the price action. You could look at indicators such as moving averages. You can draw trend lines. You can draw channels. There's lots of different ways to analyze a trend. But they are all trying to do the same thing, trying to predict the future direction of a stock based on the past data. And what this means is that you're simply believing that what has happened in the past will give you a template for what is likely going to happen in the future. So this is really simple because trend analysis gives us an idea as far as whether we think the stock's going to continue going higher or continue going lower. The second piece that we want to look at is relative strength. This is a simple calculation that many technicians and market strategists will use, and it's simply understanding how an asset compares to the performance of the market. And there's a few different ways that you can do this as well, the simplest of which is if you take simply the stock price and divide it by a market index like the S&P 500 or the Dow Jones 30 index or NASDAQ 100. It doesn't really matter which index you use as long as it's a broad-based index. If you simply compare the stock to that index, it gives you an idea as far as is the stock outperforming or is it underperforming the overall market. This is important measure to look at because it tells you how different stocks are performing relative to each other, not just to itself. And there are also more sophisticated ranking indicators such as Stock Chart School's technical rank. There's Zacks, there's Morningstars. There's a whole slew of maybe IBDs is another example. There are many, many different ways to rank stocks against each other. Now, the reason we want to take a look at each of these is that they provide us with a different view. Trend analysis provides us with an idea as far as where we think the stock's going to go relative to itself, historically speaking, and then relative strength tells us where we think the stock's going to go relative to the market. And each one of these two indicators provides some insight, but not the full picture. That's why we want to look at how to combine these two. So, one of the things that, so it's one thing to understand what is the benefit of trend analysis. Another thing to understand is what is the benefit of relative strength. However, like I said, there are many different ways to analyze the trend. You can look at moving averages, then you can look at different moving averages, and you can also have different interpretations of the same moving average. So how do you actually gain consistency from all of this? And the key here is that it actually doesn't matter which one of these trend indicators you really use or which relative strength measure you use. The key here is actually consistency, meaning not only looking at trend analysis, but looking at the same type of trend analysis day after day, month after month. That's how you are able to gain a directional view. So like I said, there's many different ways to analyze trend. What we offer here at OptionsPlay is a 1 month and 6 month trend indicator. So instead of having to pull up your own moving average, figure out which period moving average to look at, then decide based on that moving average, is the stock in a bullish or bearish phase, we do all of that analysis for you, and we tell you whether the 1 month and 6 month trend of a stock is bullish, bearish, or neutral. And you can see it on your chart right here in the upper right-hand corner, the 1 month and 6 month trend, which gives you the current snapshot. And we actually show it to you historically on the graph, so that not only do you see the current 1 month and 6 month trend, but you also see how long it's been in that trend for. Those are two very important things to look at when you're trying to do trend analysis, is not only what is the current trend, but how long has it been in that trend for. On the relative strength side, we have what's called the technical score. This is our proprietary technical ranking indicator that gives you an idea as far as how strong the stocks are compared to each other. 1 means that they are the weakest stocks in the market, 10 are the strongest stocks in the market. This allows you to compare 2 bullish stocks side by sides and tell you which one's actually stronger. So for example, if you're looking at 2 stocks, Apple and Google, and they both have bullish trends, how do you know which one is actually outperforming the other? And that's what relative strength tells you. So what we want to look at is how do we combine these 2 indicators together to gain a directional edge? And it's actually really simple. To gain a directional edge, we just simply have to combine the relative strength reading with the trend reading. And what I have here is 4 different setups that you can look at. And what I'll do is I'll go through some real examples of real stocks that you might be trading here today and look at how they look based on these 4 measures. So the top 2, I have strong bullish and strong bearish. These are really easy to remember because this is where the relative strength and the trends line up. So think of these as trend following methods. So a strong bullish stock is a stock that has strong relative strength, meaning that it's outperforming the overall market. It is one of the top performing stocks in the market, and it's exhibiting bullish trends. So not only is it strong, it's likely to continue being strong. These are what we call strong bullish candidates. Strong bearish candidates are the exact opposite. These are stocks with weak relative strength, so stocks that are underperforming the overall market, and they're exhibiting bearish trends, which means that they're more likely to continue to underperform the overall market. So these top 2 are pretty easy to remember. The bottom 2 are basically turnarounds or reversals. So the bullish turnaround are simply stocks that have weak relative strength. So think of these as stocks that have been beat up for a while, meaning stocks that have underperformed the markets. However, the trends have turned bullish, meaning the trends are telling us that even though this stock is weak, that weakness is probably starting to end, or at least not continuing to weak, versus a strong bearish stock is a weak stock that is likely going to continue weakening. The bullish turnarounds are simply weak stocks that are starting to turn around. And vice versa for a bearish turnaround, these are stocks with strong relative strength, so stocks that are outperforming the overall market. However, the trends are telling a different story. It's telling us that the trends have started to no longer continue going higher. They're actually starting to reverse. So these are strong stocks that are starting to reverse. So these are more typical of where you see at market tops, where a stock has topped and it is starting to reverse. These are indications that if you're long the stock, it might be time to start taking profits. So these are the 4 different ways that you can utilize relative strength and bullish trends to identify 4 different types of setups. And we'll go through some real examples here using OptionsPlay in just a few seconds. Now, lastly, what I want to talk about is how do you actually use these indicators to find high probability setups. So You all come to OptionsPlay looking for different ideas. I'm sure every single one of you, regardless of where you trade, are always looking for new ideas. And what I propose here is using what we call a top-down approach to find high probability setups. And it's really simple. It's really taking a look at 3 different things and helping each one of these things line up in your favor to find the highest probability trades. So when we're thinking about bullish ideas, what we want to do is have the market, the sector, and the stock all align with us. How do we do that? We first look for a bullish market. So we look for an index that's currently trending bullish. So for example, the 1 month and 6 month trend of the S&P 500 or the 1 month and 6 month trend of the NASDAQ 100 is all bullish. This is what we would call a bullish market. Then within the bullish market, what we want to find is strong and bullish sectors. So what I'll show you here in 1 second is how you can use OptionsPlay to identify which sectors are strong and which sectors are bullish. And then lastly, drill down within that sector to find the strongest and bullish stocks within that individual sector. So when you have all 3 things lined up, that's when you're going to have the highest probability of that stock continuing moving higher, because both the market, the sector, and the stock itself are all aligned with bullish and strong. And when you're looking for bearish ideas, it's the exact opposite. We want to look for markets that are exhibiting a bearish trend. And then once we have that, we're looking for weak and bearish sectors based on the setups that we just described in the slide before. And then lastly, we want to look for weak and bearish stocks within that sector. That's how we are able to find the highest probability setups of stocks that are most likely to continue moving lower. So this is the framework that you can use using just these 2 indicators alone, not having to look at anything else, to be able to quickly identify instantly whether a stock is bullish or bearish, and how to instantly find high probability setups for bullish and bearish. And for those of you that are following our daily plays, this is the methodology for how we go about selecting which stocks are bullish or bearish in our daily plays. We look for these types of things. We look for weak stocks in weak sectors and strong stocks in strong sectors when we're picking our daily plays. So if you want a little bit more insight into how we do these things, this is actually how we do it. It's not very complicated. It's quite simple. And what's key here is that we apply the same methodology day in and day out. We're not looking at different indicators. We're not looking at different technical setups all the time. We're constantly using the same approach day in and day out. That's how we've been able to gain the consistency in our daily plays. So let's start taking a look at some live trading examples, because that's what we're all here for today. What I have set up here is OptionsPlay. For those of you that are brand new, again, welcome. This tool is designed to help make your options trading as easy as possible and make options as accessible as possible. We have trading ideas and watch list here on the left. We have our security analysis panel here in the middle, and we have trading and income here on the right. We call these 3 panels the what, the why, and how of options trading. Because when you're first taking a start to your day, you want to know, what should I take a look at? We have both trade ideas and a watch list set up for you so that you can figure out which stocks to look at. Our middle panel, which is our security analysis panel, provides you with snapshot data. This is what we're going to focus on here today, looking at the 1 month and 6 month trend indicator and the technical score to help us gauge a directional view for any stock. And then lastly, what I'll do is I'll show you how to use our trading tab to leverage these views into option trading strategies, because when you have a directional view, what options allow you to do is take that directional view with limited risk and apply some leverage so that if you are correct, you can potentially have larger returns on your trade. So that's really why options is really attractive way to play your directional views. But in order to play options, you have to first have a reliable directional view. So that's what we're here to help you establish today. So I've created a watch list here called Directional Edge. I just have a few stocks in here just for illustrative purposes to show you all of the examples that we've shown you today. I'm going to start off with NASDAQ. Now, as you can see, NASDAQ, the second I bring it up, even if I know nothing about this stock, I see that the 1 month and 6 month trend is bullish. I can see that this stock has actually been bullish for quite some quite a long time. So pretty much this entire chart since April, as you can see, the 1 month and 6 month trends have been bullish consistently with each other. This is how you can use our indicators to help you reliably gain a directional view. Next, I can see that the technical score is 8, so meaning this is a strong stock outperforming the overall market. This helps me not only confirm that this bullish trend is real, that this stock is actually outperforming the overall market. These are the types of stocks that institutional buyers are buying because they need to beat certain benchmarks that they have, and only stocks that are beating the market are going to help them increase their performance. Institutional money managers are generally not going to hold on to stocks that are underperforming their benchmarks because it helps provide underperformance. So that's why stocks like GE, as you can see, 1 month and 6 month trends are bearish, technical score of 1. That tells me instantly that this is a strong bearish stock. A strong bearish stock, a stock that is currently underperforming the overall market, and the trend indicator is continuing to weaken. So what's interesting about GE is that a few weeks ago, our trend indicators actually started to turn neutral from bearish. So for quite some time, GE was a very bearish stock. As you can see, it continued to being bearish. And then right here around April 13th is when our trend indicators basically said, look, on the short term, this stock is no longer trending any lower. It's actually starting to turn around. And on 4/17, this is actually when our indicators started to turn bullish before the stock popped a little higher. And as you can see, our indicators remained neutral and bullish for quite some time until just a few days ago, where the trend indicators turned bearish again. So this is telling me that this bearish trend is likely going to resume, and there's a higher probability that this stock's going to continue moving lower going forward. And I would be looking at this 1275 support level as a potential target. So this is really where the combination of the 1 month and 6 month trend with the relative strength gives me a clear directional view on any underlying stock. Here's another example, Hershey Company. 1 month and 6 month trends are bearish. As you can see, it's been bearish for quite some time. The technical score of 2, so this is telling me this is a weak stock, underperforming in the market. These are not the type of stocks that institutional asset managers are going to hang on to. They're going to get rid of them as soon as possible because it's creating a drag on their portfolios, and it's causing them to underperform their benchmarks. So that's why these are the types of stocks that will fall out of favor until the trend indicator starts to turn bullish. That's when things will start picking up again. So that's really why you want to use the combination of technical score and trend indicators to help you gain that directional view. If you only look at one or the other, you're not gaining the full picture. If you're only looking at the trend indicator, you're not getting a feel for how is this compared to the relative market. And then if you're just only looking at relative strength, it doesn't really tell you whether the stock's going to continue to weaken or actually starting to reverse. And that's why you want to use a combination of the two. So let's look at a different example, Kellogg. Kellogg looks a little different. As you can see, it's got a technical score of 3, telling me this is a relatively weak stock, underperforming the overall market. But as you can see, trends started to turn around here in early May. On May 10th, the 1 month trend turned neutral, telling that the short-term trend is no longer continuing moving lower. And then right here around the 24th is when the 1 month and 6 month trend indicator is no longer showing bearish. So things are starting to turn around, meaning this is likely a bottom for Hershey. And the trend indicator has continued to stay green or bullish for the short term, and then yellow or neutral for the 6 month trend indicator. So this is a weak stock that may have bottomed. So for those of you that are contrarian traders and you want to try to pick bottoms, this also helps you kind of make the case for, hey, this looks like an inverted head and shoulders. You got a left shoulder here with some support around 62. You got this head with the support around 56, and it looks like it's starting to form another right shoulder here right around 62. So this could be a potential entry point for a long trade. And the great thing about this tool is that if you agree with this type of analysis and you feel that 62 is a good point to potentially enter a long trade, we provide you with 3 strategies on how to go about doing so. So you can click on I'm bullish, and you can see the 3 strategies. You can buy the stock, you can buy the call, or you can buy this call spread. And you can say, what happens if this stock goes back up to $66? And we will provide you with the analysis to instantly say, well, if you bought the 100 shares, you make a 2.76% return. If you bought this call, you make an 81% return. If you bought this call spread, you make a 96% return. Conversely, if you're wrong, what happens is this stock goes back down to that 56 level. Here, you lose $823 if you bought the stock. If you bought this call, you lose $330. If you bought the spread, you only lose $305. So not only do you get a higher return if you're correct by buying the spread, you actually end up risking less money if you're just paying the spread versus buying the stock or buying a call. And that's really why this strategy here on the right gives you the higher options play score, because when you're correct, you're getting a better reward, and when you're wrong, you're risking less. And that's why we have the options play score here, so that a lot of times if you're just looking at the max reward, max risk, and the probability of profit, it's really difficult to compare these three and say which one's best. We sum it up for you in the options play score so you can instantly see, hey, which strategy makes sense if I believe that Kellogg's starting to turn around. I think it can move back higher up to the 66 level. What are my actual projections? How will these strategies will perform? Our tool not only helps you identify 3 starting points, but also helps you look at exactly what your expected profit would be if you're correct, what your losses would be if you're wrong, so that you can instantly make a decision as to whether you want to place this trade or not. And if you are, click on the trade button, and it will provide all the details on how to enter this trade into your broker's platform. Okay, so let's go through some more examples here. Johnson & Johnson. As you can see, it's got a technical score of 3, so it's a weak stock, underperforming the overall market. The 1-month and 6-month trends are bearish, telling me that this stock is not only weak, but it's likely going to go and continue to weaken. As you can see, if any of you that are familiar with charting, 123, 125 certainly looks like a bit of a support area here. As you can see, it kind of bounced off 125, bounced off 125, finally broke below it and here. So now it's coming back up to this around 125 level. So if you believe that this stock is going to continue weakening, the small rally here might actually be a good way to enter this a short trade on Johnson & Johnson. So you can click on I'm bearish, and you'll be presented with 3 bearish strategies on how to take advantage of a bearish move on Johnson & Johnson. You can short the stock, which is not something that I would recommend. You can buy a put option, which is a great way to play a bearish trade with limited risk, or you can consider trading this put vertical for those of you that have some more experience trading options. And what it allows you to do is say, well, what happens if Johnson & Johnson goes back to its 52-week low, which is 118? So if you had done that, if you had shorted the stock, you make a 4% return. If you bought this put, you make 100% return. But if you bought this put vertical here, you make 136% return. So a substantially larger return on the put vertical than any of the other 2 strategies. And on the same token, if let's say we're wrong and the stock goes back up to 127, what happens? Here, if you had shorted the stock, you lose $400. Here, if you bought this put, you lose $350. But if you bought this put vertical, you only lose $296. That's why options is a great way to play these directional views with limited risk, because using these put verticals or verticals allow you to really take a directional view with minimal risk. And if you're correct, you actually, because of the small amount of capital it requires you to get into one of these verticals, you actually get a substantially higher return when you are correct. And that's really the power of options play, not only showing you the directional view very instantly for any stock that you type in, but instantly providing you with strategies on how to take advantage of that view without having to necessarily take all the time going through option chains. I know many of you here that trade options, may use the option chains to help you decide which expiration, which strike price to use. What I really wanted to do is show you guys how easy it is to look at these types of strategies without an option chain, so that you can utilize options play to quickly find those strategies without having to be boggled down by looking through the chains, finding an expiration strike price, then going back to the charts. There's a lot of back and forth that you end up doing. This platform was designed to help you shave all of that research down from a few minutes down to just a few seconds. Okay, so let's take a look at a few more examples. Regeneron Pharmaceuticals, technical score of 3, weak stock. Clearly underperforming the market. 1-month and 6-month trend telling a slightly different story, telling me that even though this is a weak stock, it doesn't look like it's going to continue weakening. As you can see, it kind of recently broke above a resistance level right around this 310 area. And as you can see, this turned bullish just a few days ago, just 3 days ago on June 4th. That's when this pharmaceutical stock turned neutral and bullish again. What this tells me is that this stock is even though it was weak and underperforming, looks like it may have bottomed here. So as you can see, it made a lower high around 290 after it made an all-time low here on May 9th. On May 29th, it kind of hit a bottom here around 290, and it's starting to rally a little higher. And that's what the trend indicators are telling me, that it's just starting to create a bullish trend here on a weak stock. So if you like to pick bottoms and you like to be a contrarian trader, this is a trade that you might want to take a look at. And there's a lot of upside room here to that next resistance level around 345, 350. So if you think the stock's going to go to 345, 345, as you can see, if you bought the stock, you'd make a nice 11% return. But if you bought this call, you make 156% return. But if you bought this vertical, 177% return. That's really why options is a great vehicle to use when you're playing these types of trades. Conversely, what if you're wrong? What if the stock just reverses right back to its 290 low or 285 low? If it does that, here, if you bought the stock, you lose $1,900, almost $2,000. More risk on buying that stock. Buying this put, $1,500. Buying this call spread, $1,200. So almost half the risk of buying the stock, yet if you're correct, you're going to make a substantially higher return than just buying that stock. So that's really why consider using these types of strategies. And for those of you that are brand new to options and you're not sure what that vertical means, make sure you use our strategy checklist. It just checks for a few different things that you might not be aware of, risks that you might not be aware of before you place your trade. And once you're ready, you have all the data in terms of how to enter this trade into your broker's platform. So at this point, I've gone through quite a few examples. I can go through a few more just to illustrate this. But what I wanted to show you actually is one way that you can use our watch list that maybe some of you may not already know, is that you can sort your watch list based on the score column. And that score is this technical score. So even though what this allows you to do is that I can now look at a watch list and without even clicking on it, know exactly which stocks are strong bullish stocks, which stocks are weak bearish stocks, and then which stocks are starting to turn around. So here on utilities, as you can see, it's got a score of 2 and it's got red arrows, or it's all red. That's telling me this is a weak stock and it's continuing going lower. So if I look at utilities, as you can see, just a few days ago, utilities really started to fall apart and it's one of the weakest sectors. So this tells me utilities is a weak sector that is still continuing to weaken. Vice versa, if let's say I look at consumer discretionary score of 7, this is a strong sector and the 1 month and 6 month trends are bullish, telling me that this sector is not only strong, but likely to continue going higher. Versus, let's say, let's take a look at some individual stocks. So individual stocks, again, without having to even pull up the stock, I can tell you that Kellogg is a weak stock that is starting to turn around because it's got a score of 3 and the 1 month trend is turning green. So here I can just pull that stock and I can see that Kellogg, as you can see, this was one of the examples that we just went over, and vice versa CenturyLink. It's got a score of 8, but as you can see, it's all red across the board. That's telling me this is a strong stock, but it's starting to maybe come off. So as you can see, this stock took a bit of a dip a few days ago and the trend indicators turned bearish. Actually, the trend indicators turned bearish here on the 25th. The short-term indicator turned bearish. What this is telling me is that a CenturyLink is likely have topped around here. So if you're long this stock, this is an early warning sign of potentially time to take profits and cutting. So even if you don't trade options, you can still utilize these trend indicators to help you decide when to get in and when to potentially take profits. But as you can see, it turned bearish on the 25th. It continued to turn bearish until the 6 month trend also turned bearish here on the 1st. And things are starting to look a little worse. So if you're long CenturyLink, whether you're a short-term or long-term investor in this stock, this is something to pay attention to, that it might be time to take profits. And for those of you that are options traders, that like to be a bit more opportunistic, this might be a potential opportunity to get short this stock. So as you can see, you might feel that this stock is easily going to go back to its 1650 or maybe even 16 support level. So what happens if you think this stock's going to go down to 16? And that's the beauty of technical analysis, that it provides you not only with a template for what's going to happen, but also a specific target price. And that's really important in helping you analyze these option strategies. So, you need to have a target price in order to analyze these option strategies. Here, you can short the stock. You make a 9% return if the stock goes down to 16. If you bought this put, a really nice 150% return. But if you bought this put vertical here, almost a 200% return if the stock does go down to that $16 level. And again, these are the types of tools and setups that we look for in our daily plays when we send them out to you every day. And then again, vice versa. Let's say what happens if CenturyLink, reverses right back up to 19. What are you expecting? Or maybe even 19 and a half. What's the worst case scenario here? If you had shorted the stock, you'd lose $191 per share. $191 per 100 shares. If you bought this put, you only lose $80. If you bought this put vertical, you only risk $67. Substantially less capital at risk to take the same bearish bet as shorting the stock, with much better returns if you are correct. So again, that's how you can utilize our tools. So you can set up a watch list. Use this. I typically recommend that you sort it by the score, because that helps you very quickly gauge on a very long list of stocks. What are the strong stocks? What are the weak stocks? Let me show you consumer discretionary, which is a very long list, right? So I sorted by the score of 1. So without having to even look through this list, without having to click on a single one, I can tell you stocks like Newell Brands, Viacom, Whirlpool. These are the weak stocks. These are stocks that institutional money managers do not want to touch, because these are stocks that are severely underperforming the overall markets. And if I scroll to the other end of that list, stocks like Nike, Target, TJX, Foot Locker, Kohl's, these are the types of stocks that money managers want, because these are stocks that are helping them outperform their benchmarks. So I can very quickly, without having even to click on any single stock, go through a large watch list and immediately know which stocks, if I'm bullish, should I pay attention to, and if I'm bearish, which stocks should I pay attention to, and really focus my attention on there, so that I'm not spending hours and hours researching all these different stocks. I can just scan a watch list and within a few seconds know which stocks I want to pay attention to. And like I said, when we're talking about the top-down approach, you always want to start with the overall market. So the S&P 500 currently has 1 month and 6-month trends are bullish. So if that's the case, I'm probably going to be looking at some bullish sectors. So I'll drill down into the sectors, sort it by the score, and I will know that I'm not going to probably look at utilities or consumer staples, because these are weak stocks. I'm more likely to look at energy, consumer discretionary, and technology, because these are the strong sectors. And once I have that, then I will drill down into those sectors. So if I want to look at some energy stocks, then I'll look at energy stocks and try to find the stocks with the high scores and the green arrows, because these are strong stocks still continuing to trend any higher. This is how you will be able to gain a directional edge and find the highest probability setups using our platform. Once you found a stock that you're comfortable with, or if, let's say, a friend of yours gives you a stock tip, or you hear on the news about a stock that you want to research, type it in and you can instantly use this tool to help you gauge a directional view, because you can see the technical score and you can see the 1 month and 6 month trend indicators. So you can instantly say, do I agree with this? And if you do, use our tools to help you leverage that into an options trade, so that you don't have to pull up an option chain, figure out which expirations and strike prices, and do all of these number crunching yourself, trying to calculate all your Greeks and figure that out. We do all of that for you just through our P&L simulator. You just tell where you think the stock's going to go, and we will instantly tell you which strategy provides you with the expected returns, so that you can compare different strategies and decide which one's for you. So with that, what I want to do is I want to open this up for Q&A. I welcome any feedback, any thoughts, any symbols you want to look at. And I hope you guys find this useful. If you find this useful, please type yes or into the chat window so I know that you guys are using these types of tools, because I do these webinars for you guys. I want you guys to be able to learn something when you come to these webinars. So if you have any feedback, please let us know. So at this point, again, any questions, please type them into the chat window and I'll try to answer as many questions as possible. Doug's asking, how do I get the trade plan from OP to my broker? Really simple. You click on the trade button and we will tell you exactly how to enter this trade into your broker's platform. David's asking, as an enhancement, have you considered formulating 3-leg trades? So you can certainly add your own 3-leg trades. We have thought about adding condors and butterflies to this as a default strategy, but very, very few people actually trade them. So that's why we don't default to. The reason we default to these 3 strategies is because almost 80% of the trading that you guys actually do in your real accounts are in these strategies. A lot of times we like to talk about trading condors and butterflies, but very, very few people do. The transaction cost is substantially higher. So it's really not something that most people will trade, but you can set up your own butterfly instantly using our strategy constructor right here. How do you determine which sector a stock is in? Great question. So I would say the best resource is simply the indices themselves. So for example, sector spiders, you can go to their website, you can type in any stock name. So for example, if you don't know what Johnson & Johnson is, you just type that in and it will tell you exactly what sector it's in. So as you can see right here, sector spider, here it's in the healthcare sector. That's one of the best ways, at least that I found. Or on our watch list, it's all broken down by sector. So you can look at which stocks are in which sector immediately from our watch list. CVX, I'm guessing that's a question for the stock. I'll come back to this real quick. I'm going to answer some other questions first. What percentage of recommended trades are typically successful? So we actually published this record. So about 2/3 of our trades are winners, and our average winner is usually slightly larger than our average losing trade. So 2/3 of our picks from using this strategy is successful based on our statistics. Next question. If one sells cover calls with the intent to generate incremental return and not lose the stock via calls, what is the ideal trend and relative strength of the stock? So if you're selling cover calls, this is where I'm not a big believer in using these directional indicators when you're selling cover calls, because cover calls is really based on probability. We base all of our cover call recommendations based on probability, so it really doesn't matter the direction of the stock. But I guess to answer your question, if you're bullish on us, if you see a stock is bullish and it's got strong relative strength, that will typically may have a higher probability of that stock being called away than if you see a weak stock with bearish trends. To answer your question. How do you add a list of stocks to a new watch list? Very simple. You just click on the watch list that you want to enter, and you can just type them right in here, and to add your symbols directly into your watch list. Let's see. How would you trade SPY at this moment? Great question. Well, let me answer this Chevron question first, right? I'll come back to the questions here. Let's just take a look at Chevron. It's got a neutral score of 5. 1 month and 6 month trends are a little mixed. 1 month trend is weak, is mildly bullish, mildly bearish. Sorry, 6 month trend is bullish. The way I read this is that here it's a neutral stock, so meaning it's pretty much performing on par with the markets. As you can see, this trend quality here is starting to deteriorate. So we had a very clear bullish trend throughout this entire time until recently this trend quality started to deteriorate. So this leads me to kind of thoughts that this is likely going to pull back. The only thing I'll keep in mind is that this is in a relatively strong sector, the energy sector, which is currently XLE is, I believe, one of the strongest sectors. As you can see, a sector score of 7. So it's hard. Sometimes it's not very clear, but if I'm looking at the stock itself, I certainly see a bit of a head and shoulders type of pattern here. Left shoulder, head here, right shoulder, starting to turn around here. But like I said, it's in a bullish sector, so I wouldn't be too surprised if this thing does recover back up to that 130. If that does happen, you will see these 1 month and 6 month trend indicators turn positive again. Bill, in regards to your Condor question, Bill, please email me. I'd love to answer your question, but it kind of is deviating a bit from this specific webinar, because Condor trades are more based on volatility than anything else, and that's not what we're covering here today. I have a few other questions here. Let's see. I know I'll cover SPY in 1 second. 1 month and 6 month trend is for historical data. Will it be applicable for the future? The answer really is twofold. Number one, if you're a technical analyst, you do believe that historical trends do give you some evidence as to what is likely going to happen in the future. There's no such thing as a crystal ball, but it will provide a template for what is likely to happen. The other thing is 1 month and 6 month trend is not only useful in terms of its current snapshot, but how long it's been in a trend for. So if a stock has been in a bullish trend for a very long time, then there's slightly less likelihood it's going to continue and have a higher likelihood it's going to reverse. But if you see a stock is just starting its trend, then that certainly is more of a bullish view. So as you can see, if you caught onto this bullish trend much earlier when it first turned bullish, you had a very nice run higher. And the longer it stays in that trend, the more likely that you're going to get a reversal. But our trend indicators are designed to give you that reversal very, very quickly. So as you can see here, on May 24th, the 1 month trend turned neutral. So this stock had barely moved just a few bucks from its all-time highs, and it already started to turn neutral. Our 1 month indicator is designed to give you a very quick reversal if it does start to happen. When looking at trades, what does the number in the circle indicate? If you're referring to the OptionsPlay score, I just referred to it before. It tells you how well balanced the potential reward on this trade is versus the potential risk compared to all the other strategies. So so like I said, in this scenario, when Chevron's at 126 right now, if you bought the stock versus bought the call or versus bought the call vertical, as you can see, if the stock goes higher, I'm actually making a higher return here on the call vertical. And then if the stock reverses and goes lower, I actually end up losing the least amount of money on this call vertical. That's why it's got a score of 102 and it's higher than the other two, because when I'm correct, I'm making a higher return. When I'm wrong, I'm actually risking less money, the best of both worlds. And that's really why this has a higher OptionsPlay score. Great question. There's a lot of questions here. I'll try to get to as many as possible. Is the technical score basically RSI? It is not. The technical score is much more complicated. It is a 6-factor model that we've created that looks at short, medium, and long-term technical indicators to calculate a raw score. Then we rank all the stocks against each other based on that raw score. So it is not RSI. Are you considering option premiums at all? I don't know what you're referring to in terms of that, but everything is calculated on the right-hand side using the current option premium. So we use the most current price to calculate everything for you. Jay, can you explain what the number of bars with percentage means? I'm not sure which one you're referring to. If you could clarify for that, that'd be great. Catherine, how much does this cost? Great question. Please send us an email at info@optionsplay.com. I'm happy to review your account and give you the cost of your account. Let's see. So I have a few other questions that I think I want to take a look at here. You picked CMG, Chipotle Mexican, recently with a July vertical. Stopped out today at 50. I'm not sure what your question is. If you could clarify, that'd be great. I know I had a couple of questions about looking at SPY, so let's take a look at SPY. SPY recently broke to new highs. We don't have a relative strength ranking on SPY because it is the market, so we can't compare the market to itself. But the 1 month and 6 month trends are bullish. So this is really where you have to look at, it in the context of, the fact that it's bullish, broke to an all-time high, and the question is to see, is there any follow-through? That helps us determine, what our views are on the underlying stock. Analyzing the markets is a little trickier and does take a lot more time. However, one of the things that we typically want to look at is the individual constituents. We want to look at what are the sectors doing. That gives us a much better picture of where the markets are going to go, because if you think about the market is consistent of all the different stocks within that market. So it's really important to look at the individual sectors, see how they are performing. That generally provides a much better picture. Right now, the sectors are rotating a lot. So even though we're not seeing a lot of movement in the SPY, it's moving at very tight ranges, but we're getting a lot of movement in the underlying stocks. Energy is up 1.5%. Technology was down almost 1% on the day. That's a huge spread between two fairly large sectors of our economy, where one sector is really, really strong and the other sector is really, really weak. And it kind of negates each other. And sometimes it doesn't show up when you're looking at the SPY. So it's really important to looking at the individual sectors. That will help provide a better picture as to what's actually going to happen in the actual market. I'm still not sure what you're referring to, Jay. It says 98 bars at 0%. I'm not sure what 98 bars is referring to. Gray box on chart. Anyone else know what he's referring to? Sorry, Jay, I'm just not quite sure what you're referring to right now. Anyway, yeah, great. Send me an email. I'm happy to answer your question. On thoughts on LNG. Very strong stock. 1 month and 6 month trend is bullish. As you can see, it's been bullish for quite some time. So if you are bullish, you are a bit late to this. As you can see, the stock has rallied from $55 when our indicators turned bullish. It's now trading at $65. That doesn't mean it's too late, especially because the energy sector is still in a bullish trend. But again, I highly recommend that if you want to take a bullish view on this type of stock, use options so that you limit your risk. You want to limit your risk as much as possible. So even if you're completely wrong on this trade and the stock drops, you're limiting yourself to that $250 loss per contract, versus if you had bought the stock or bought the call, you'd be risking more money. And if you do get that upside follow through that you're expecting, you get a much nicer return on trading that call spread. Great box that hover when you hover over support and resistance lines. Not sure which gray box. So these support and resistance lines are basically telling you where the current support is, where the current resistance is, and how far the stock needs to move to hit that next support or next resistance level. How indicative of ROI is SCTR, and what are your positive and negative comments on SCTR? I don't have any negative or positive comments per se. It's all trying to do the same thing. That's like trying to have a negative or positive comment on RSI or MACD or stochastics. All of these indicators are all trying to tell you relatively the same thing. They're just different methods for how to do so. So any ranking, so my point here again is that it doesn't matter which one of these things you use. It doesn't matter whether you use IBD's ranking indicator or our technical score or stock chart's technical score. It's all relatively the same thing. What's more important is that you stay consistent in using the same one. So if you're going to use IBD today, use IBD tomorrow, IBD the day after. Use the same measuring stick. If you use different measuring sticks day in and day out, that's when you get inconsistent results. That's really my point. I don't really think that one of these is better than the other. I just think it's most important that you stick to one and stick to it. Is volatility shown in options play? It is here. So as you can see, if you bought this LNG call or call vertical, it's trading at a roughly 30 vol right now. How you use it is if you expect a move to happen before expiration and you think vol is either going to decrease or increase, this tool allows you to quickly identify kind of what your expected return is based on vol. So vol is really vega, your volatility exposure when you're long or short options, and this vol tells you how your option pricing will actually be affected based on that change in vol. How do you trade VIX and VIX products? You can only trade VIX index options or VIX futures. I'm not sure which one of those you are interested in trading, but those are the two products that you can trade on the VIX. You can also trade some of the short-term VIX ETFs. I don't recommend you going trading them unless you have lots of experience trading VIX futures or VIX options, but that is also one other product you can trade. You did not answer the question. Shall I assume that you do not advocate trading SPY? I'm not sure what your views are on SPY. I don't think there's any reason why you can't trade SPY. If you're bullish on SPY, I highly recommend you to use calls and call options. They are really cheap right now from a volatility perspective. As you can see, they're trading at about 9.5 vol, which is historically probably as cheap as it'll get. And the other way you can use this is actually hedging a portfolio. So if you're long equities and you're concerned about a pullback and you don't want to sell those equities, buying a put or a put spread is one way you can potentially hedge your portfolio. There's plenty of ways to trade SPY. I just don't know what your views are in particular. Let's see, Ed, in regards to your question about the watch list, please shoot me an email. I'm happy to answer, take a look at your account for you. Are dividends considered in the scenario shown to the right? No, they are not, because dividends don't really affect the stock option. They affect the underlying, so they are not accounted for in this outlook. Can you review the risk versus invest function in simulator? If you're referring to the risk and investment calculator, this is really designed to help you better calculate how many contracts you can trade. So and there's really two ways to approach this. You either think of how much money you would typically invest in the stock. So if let's say, let's go back to maybe Facebook. If let's say you are going to invest a certain dollar amount in the stock, this allows you to say, well, I was going to invest let's say $50,000 in the stock. How many call contracts is that equivalent of? So it calculates the number of shares and then calculate the appropriate number of contracts. Versus some people like to think of dollar risk, meaning I'm only willing to risk $5,000 on this trade. And what you do is you can click on that. It will calculate exactly the number of contracts that causes you to risk no more than roughly $5,000 on that trade. So that's really how we use the risk and investment calculator. The question about Chipotle, and the question is that it's below 450, which is our stop loss. Yeah, so if you read the actual text on our daily plays, we usually say if the stock closes below a certain price for a couple of days, that's when you want to consider taking your losses. So I wouldn't call this as a failed trade yet. We've only been in this trade for a couple of days. It's only just went below by a couple of dollars, so really not enough for us to say it's time to get out. But if it does stay below 450 for multiple days, then that would be a reason to consider getting out of the trade at a loss. Is expected return based on holding position 2? I'm guessing you mean holding position to expiration. And no, you can use any expiration date you want. So for example, if you're bullish on Chipotle and you bought the stock and you think it's going to go up to 485, you can either assume that you hold it to expiration, what are your expected returns, but you can also say what happens if it hits 486 somewhere between now and expiration. So you can choose any date you want, and we'll show you what the expected returns for each one of these strategies are. So it's not just for expiration, it's for any time before expiration. What is the percentage on the support and resistance? It's just telling you how far the stock needs to move to hit that next support. So as you can see here, it needs to move 2% to hit that next resistance. It needs to hit 10% to hit that next support, 5% to hit the next resistance level above that. Does the platform provide the stock's expected move using Greek spot and option expiration date? So yeah, we have that in our trading range simulator. So that tells you can select the expiration date, and will tell you the expected move for that expiration date. It will tell you that right here, and you can even assume normal distribution or wide distribution. Either one will tell you the expected range for any given expiration that you choose. Do you archive the daily plays on the site? Absolutely. It's at optionsplay.com/dailyplay. I think I've got to all your questions, but if I missed any, please just type them in again. And any more questions, please type them into the chat window. I do want to thank everyone for taking the time out, every Thursday to come and listen to these webinars. Again, I hope you guys find this material useful, helping you, gain a view on how to simplify your life. And that's really my work here, is building things that help you guys simplify your trading, because I certainly was one of those traders that had 4 desktops, 4 monitors on my desktop, and I got to a point where I said, this can't be the only way to do this. There has to be a better way. And that's really why we started this company 5 years ago, because we wanted to put all the trading that we wanted to do on one screen and not have to travel with 4 monitors to do our trading. And that's really what we've created, and that's what I'm hoping to teach you guys here today. Puts on Yama Gold. So this is a Canadian stock. Is this the one where you're looking to sell puts on this? I don't remember. If you can let me know, I'm happy to take a look at this. As you can see, this is a strong stock. 1 month and 6 month trends are bullish, so telling me this is a stock that is, as you can see, this bullish trend is not very clear, as you can see, and so this is why not only do we show you the 1 month trend currently, we show you how it's changed historically. So as you can see, even though this is a strong stock, it's really been very sideways and really choppy, and this trend hasn't been very clear. It did turn bullish a couple of days, but until it really breaks outside of this range of, I'd say above $293, I really wouldn't be too bullish on this stock. Even though all the indicators tell us, this is where, the more experience you have with reading these charts, the easier it becomes to say, this does show me bullish trends, but it's not quite as bullish until it actually breaks out of a range. And that's really why you generally want to see stronger stocks. So stocks with 8s and 9s and 10s will usually have already broken out of this range. And that's really why technical score is really important along with your trend indicators, because it tells you how strong a stock is relative to the other stocks. Catherine, great. I'm really hoping that you guys use this tool to help you feel more confident in not only analyzing the underlying stocks, but more importantly, and making sure that you understand your risks before you place your first options trade, because that's usually the complaint that we get from people when they're starting out with options is they say, I don't know the risks, or I think it's too risky, I don't really understand it. Our tool is designed to help you better understand your risks before you go ahead and place your trade, so that you know that before you place your trade, not after you place your trade. David, yes, absolutely. That is exactly what we are working on, is broker integration, so that you can actually execute directly from OptionsPlay directly into your broker's platform. Any more questions? If not, like I said, this webinar is recorded, and we'll be sending out the recording in I try to get them out as quickly as possible now in about 30 minutes. I will also include the presentation slides, which for those of you that have not used OptionsPlay before, there's quite a few links in there in the presentation slides, so I highly recommend you to download them. We have a link to all of our webinar recordings, so if you want to view some of the older ones or review the other ones, it's all available. You have a link to the daily plays. So I had a question before about how to find the daily plays. There's a link to that in the slides. How to subscribe if you aren't a subscriber currently. And lastly, if you want to follow us on YouTube, that is the best way to get all of our up-to-date webinar information, because every time we upload a new one, you'll instantly get them in your inbox, even if you're not registered for the webinar. So I highly recommend you to subscribe to us on YouTube. That's why you can get all of our material when as soon as it's available. The donut icon, I have a question about the donut icon. Are you referring to this little icon here on the right? If you are, that just means that this is the strategy on the 3 strategies that we provide or recommend. So sometimes you'll see a check mark. If you see the check mark, that simply means it's the highest ranked strategy out of the 3. If you see the donut icon, which is kind of rare, but the donut icon means that everything in our strategy checklist is green. So if everything on the strategy checklist checks out as green, that's when you get the OptionsPlay logo. Thank you, everyone, for joining me this afternoon. Again, I hope you guys have found this useful. We will be back next Thursday. I've published the webinar schedule, so hopefully you guys have seen that already and registered ahead of time. If not, we will send out reminder emails next week, so I'll see you guys next Thursday. Thank you, guys. Have a great afternoon.